My name's Pricila Delatorre.
And my name is Jordan Hemp.
And you're listening to Off the Market Confessions,
where we talk about real stories, real estate, and real life. Welcome back to Off the Market Confessions. I'm Jordan.
And I'm Pricila.
And this is our guest star today, Taylor Elmo with CMG Home Loans. Taylor is a guru and a master at loans. And so we thought it was going to be a really great idea to have him on here to talk about the 5 steps that buyers can do to start shopping for a home. So Taylor knows a lot about different programs, different scenarios that buyers should go through if they're coming from a unique background of employment. And so we're going to break all of that down today. But first, I want to thank you for being here with us, Taylor. So
I'm excited to have you.
Yeah, no, thanks for having me.
We needed some new blood in here.
When Jordan said it, I was like,
so welcome.
I was like, right on. Yeah, right away. I'm doing
Cool.
So how long have you been in the loan industry?
Since December 2020, and then started January.
2020?
Yeah, my first day was January 21, actually. Yeah.
I did not know that.
Yeah.
You got in like right before I did.
Yeah.
Like only 5 or 6 months before me.
Yeah.
Wait, when did
crazy.
you start?
June of 2020.
Oh, so after
No,
you.
so I was after you.
Yeah.
Because I just passed my test in November. And then where I was going there, like, hey, instead of coming in December, let's just have you come in January.
Of 2021?
Of 2021, yeah.
Oh, shoot. Wow. Oh, my gosh.
And I
I
started
didn't know that.
right like 2 months after you is when I started.
Yeah.
It was weird because like during that time, COVID was, obviously at its height. And we didn't get to go like network and like, meet people at events in real estate. So when I finally did get to know you, or I just assumed you'd been in it for a while, longer than me,
No, I felt the same. Because like, I mean, especially like even now to this day, I still don't know everybody, So, so you're kind of learning.
Yeah.
I feel more
and then there's new
comfortable.
faces too every year, I feel like.
Yeah.
So it's like you kind of have to keep up with new people. Yeah.
Yeah.
Mhm.
Yeah.
Yeah.
Wow, that's
Well,
crazy.
you more so than ever because you get to network and, more than we do, I feel like, right?
I don't
know
that.
because like I feel like you guys do a lot.
We
Like,
do.
I mean,
Yeah.
I see you guys everywhere. I feel like every event you guys are part of or running it, and I feel like
Jordan.
dang, I need
Yeah,
to get
that's
there,
right.
So I'm trying to be at more.
It's hard, but I like being involved in our association and helping with running that kind of stuff and showing up to all the events. I just think it's fun. I mean, it's good for building your reputation and rapport with other agents and lenders. Well, okay, let's dive in. Let's go ahead and talk about the 5 steps for buyers to get started with buying a home. Before you dive in and just start looking on Zillow or calling a realtor to go look at some properties, there's some back end work that needs to be done on your end first. And so the intent here is to kind of educate and inform people so they know how to be prepared, because one of the things we were talking about earlier was if you get, if you jump the gun and you go find a house that you want to buy and let's say you fall in love with it and you're like, oh my gosh, you call Taylor Elmo up, you're like, Taylor, I want to buy this house. I just saw it. They're reviewing offers tomorrow or something. And you try to apply and then you've got to gather docs and all that. You're actually behind at this point. And you're probably going to feel a little bit let down if it doesn't work out in time for you. So there's a proper way to do it.
Step 1 is kind of like just self-awareness, right? So being self-aware is knowing your budget and figuring out your credit score. So like, if you don't know how to obtain your credit score, you don't know your credit score, you're allowed a free one each year. So you can reach out to go to Experian. I use Experian. You can download the app for free and it will tell you, do you want your free credit score? So you just sign up this protected app and then you get to see it. And then you kind of know where your credit score lies. And anything like me, like I don't shy away from a 500 credit borrower because I went to school, and I love education. And so it's just an opportunity to educate somebody on, hey, this is what you can do to buy a home. That's what Rodney, my manager now, he did my first loan. I did not have the greatest credit score. And it took 2 years. And he was just like, kept up with me. And so I was like, I want to do what you do.
Yeah.
You made me feel good.
That's so cool.
So if they get a credit score like that, how long is that really good for before they might need to check again?
I think,
because it changes like on a monthly basis when credit's reported, but
yeah. So let's say they check it. Let's say they checked it today. I mean, by July, it could be different,
Right.
But you just want to make sure that once you check it, it'll give you tips. Like the Experian app will give you tips on how to.
Like what you can do to bump up your score, right? Yeah, I think
Yeah.
I've seen it before too.
I mean, a lot of people use Credit Karma,
Mhm.
which now isn't so bad that
Mhm.
FHA allows like the managed credit score. I mean, you can either do that or you can, obviously reach out and
Mhm.
we'll help guide you. But if
Mhm.
you're not wanting to, if you're shy about it and want to really get self-aware, really diving into your own budget and just seeing what amount of money comes in each month
Mhm.
and how much am I spending each month.
Mhm.
Because right now you're paying $1,500 a month for rent and you want to buy this cute house that you love. And in the long term, it's really beneficial, but it also is going to take some, you're going to have to,
Maybe more money. Yeah.
well, and just some discipline.
Mhm.
Like,
Mhm.
I mean, we're such a consumerism is just at an all-time high since COVID. And so it's like, just really pull back. Cause if you can pull back and be disciplined, you'll be surprised. Like
Yeah.
I have people that have a household income of less than 60,000. They're able to buy a house that they want
Yeah.
because they don't have any debt.
Yeah. And I
Yeah.
think personally, from personal experience, when I bought my house, at the time I was like, dang, I have to pay that's a big mortgage. But now it seems like an easy number compared to what everyone else is paying. But I did learn to be more disciplined and like, hey, that comes first. Whatever I have to pay, as long as I have enough for this, then I should be fine. Everything else is just, like you said, it's like non-essential stuff. So yeah, cool.
Do you feel like that's actually funny you say that? Because I was thinking back about when I bought my house. I think we were going from paying $900
That's
for
so
like, we had a
good.
3-bed, 2-bath
Yes.
duplex for $900. That was
Oh my
crazy.
God. You
But
should just do it.
thought about buying
You're
it from
wrapping
the
it up
guy.
right now.
Yeah, no. So actually, I think it was $850. But anyways,
that's so
we went from that to a $3,400 mortgage.
That's crazy.
The jump is
Well, I
ridiculous.
don't know if you remember how I got into my home. I
Oh, yeah.
used a brokered loan. It was a bank statement loan, and it was a 10% interest rate. It was over 10, but I knew it was temporary. Like being in the industry that we're in, I knew going into that what my plan was. It was like stick it out 6 months, refinance right away. I dropped that interest rate by over 4%.
Wow.
And my mortgage went down to, I think it was $2,750 is what it went down to. And then it went up a little bit because my property taxes and insurance went up. And now I got it down again back to $2,750 because my property taxes actually lowered.
Yeah.
2 years in a row now. Yeah.
I guess it's not really worth it then. I'm just kidding.
No, but the sticker shock though, like talked about that. Like I feel like, for some people that's pretty crazy, but you have to know that there is a cost to using a loan. That's just how the world works.
Yeah.
And in the end, you're still building wealth for yourself. You have to look at it in the long term, right? Yeah. So sticker shock can hurt, but do you feel like you ever have to give people like a conversation, like talk to them about like, hey, that's okay. Like calm them down, like talk them off the ledge for a second. Cause they're like, whoa.
Yeah. I mean, especially when it's like, I always ask people, I'm going to tell them, hey, you're going to get pre-approved for the max. I'm going to tell you what you can get pre-approved for because that feels pretty good to be like, hey, I can buy a house at this.
Right.
But then we're also, I ask you, what is your monthly payment goal? Like if you had a goal, not going too low, not going too high, but where you're comfortable, you can still keep the same lifestyle, where would that be? And it's always far less than what it actually should be for the home that they actually want. So it's just kind of communicating and setting that expectation. And I think if you set that expectation up front, then it's like, okay. And then you're not sending agents out to like, not wasting your time, but you can pinpoint more so rather than running around to 20 houses and really are approved for 6 of those, now narrow it down and kind of pinpoint it.
Yeah,
for
sure.
But
Yeah. You also mentioned being realistic with your budget and kind of like building discipline or learning how to be disciplined. And I think that I've never been the best at budgeting like my personal finances either, but I have gone through like a bank statement. That's one of the things that I feel like you can do if you don't know how to budget and you want to start, look at your like a 1-month history of your bank statement. And if you see a lot of Taco Bell or McDonald's,
Taco Bell.
That's where you
Why are you
start.
coming for the Taco Bell?
Truly,
people?
hey, if you add those up and you look at, wow, I spent like over $200 on fast food just in the last month, think about how much that can save you if maybe you don't like cut it out entirely, like that's hard, but you got to transition to start thinking like, I got to pull back and then I can start budgeting more for the more important things like a mortgage or, insurances and stuff like that. So that's how I feel like I taught myself how to budget a little bit. And then, I mean, I'm sure with AI, you could plug in stuff and have
Mhm.
AI or chat help you budget.
Like decipher what it is, what the issue
Yeah.
is. Yeah.
Yeah.
What you're
I bet you
spending
could
money
plug your
on.
bank statement in there. I don't know
You
how to do
probably
that, but
can.
you
I
could
can.
and be
I don't
like,
care who has
Gentlemen,
that.
break this down.
I'm like, I
for
don't
me."
care if the government had what.
They already know.
Yeah, I went to Marshall's 20 times last month. Whatever. Judge me. Who cares?
But as long as you, again, it takes discipline because you have to go through all your stuff. And you have to put every single like bank
Mhm.
account in there, credit card in there, every loan.
Yeah.
So that way it really
Mhm.
tracks it accurately. But I mean, yeah, that's what helped me. And
Yeah.
it's gut wrenching sometimes.
Yeah.
You're just
Because
like,
then you realize what's really happening with your finances.
Mhm.
Yeah.
and then like I donate a lot of money
Mhm.
and I don't ask for any receipt for
Oh,
what
yeah.
Me.
And I'm
I
like,
do.
oh my gosh, I should have because
So bad.
like, at least you get to choose where your tax money's going,
Mhm. Right.
Yeah.
That's
Yeah.
true.
Well,
But
let's move on to number 2. Connect with an industry professional. So this is like, maybe you've had the idea in your mind that you want to buy a house and you start looking at like, okay, I mean, if I want to buy a house, I can probably justify this much on a monthly basis towards a mortgage. I know my credit's not that bad. This is where you'd move on forward to connecting with a professional. So whether you reach out to a lender or escrow people, anybody in the industry, I feel like most of us are going to point them back to you. And then what would you do when you receive that call or that lead from a buyer or from a realtor?
yeah, first thing is just, one, whoever I always ask like, hey, who sent you over?
Mhm.
Right. Because to me, that's what feeds my family. That's what puts
Mhm.
food on the table and keeps us helping people. So that's the first thing that I try to do. And then I just start asking them questions. I first ask like, are you cool with the phone call or do you guys want to meet in person or, how would you like to do this? And I feel like most people are being more receptive to the
Mhm.
phone calls. Obviously, if they're busy and their work doesn't allow them to take a phone call,
Mhm.
then we text. But really, I want to get them on the phone
Mhm.
because I have like in my head is a cash, credit, and income. And as long as I ask you the questions that go along with that, I can
Mhm.
pinpoint where you're going to
Mhm.
end up likely
Mhm.
and see right after that conversation, hey, they're probably going to be pre-approved for
Mhm.
$2,500 payment or
Mhm.
$5,000 payment,
Mhm.
whatever. And so once I kind of say, hey, like, hey, I do think that you'd be a good fit to apply. And
Mhm.
even if it's going to take some time, it's like,
Mhm.
hey, your income's there, maybe credit's not, or
Mhm.
maybe credit's there, income's not, we need a co-bar or whatever. But
Mhm.
then it's just coaching them into it. Like, hey, I need the application done and I'm going to ask you if you're a self-employed borrower, like if you're self-employed, so you own your own business or
Mhm.
you're a 1099 contracted employee, or if you're a W-2 employee, so you get
Mhm.
W-2s from your employer.
Mhm.
But the moment that I have that question answered, I know which documents to ask you
Mhm.
because it is considerably like more like
Mhm.
in depth when we have to go to a self-employed borrower that hasn't been in the business
Mhm.
and what they're doing for more than 5 years.
Yeah.
If they haven't owned their business for more than 5 years, it's a little more. But
Hard.
once they have that,
Mhm.
it's we can go
Yeah.
pretty quick once we have
Mhm.
the application and the documents.
Yeah.
Okay. Let's move on to number 3. I feel like that was
That was
pretty
pretty
straightforward.
Whoops.
self-explanatory.
Yeah.
Just jump
No,
right
that's
in.
Yeah.
good. That's good. I mean, yeah, it's like, I mean, once you talk to Taylor, he's going to tell you first apply, really break down the rest of this. So that's step 3 for us. So number 3 is apply and gather your docs. And
Mhm.
when we say apply, we mean apply for the loan through
Mhm.
their application portal or whatever. It's all online, right?
Yeah. Yeah. I've been taking more applications on the phone and that's
Mhm.
not bad. So I just open up my program and I just fill it out as you go.
Mhm.
They fill it out. There's a series of questions that it imports it. And you can do the same thing with your documents. So if you're like phone savvy, if you know how to work like social media, you'll be fine figuring out how to upload documents.
Right.
Just make sure when you do upload documents, you can take pictures of stuff. We try to shy away from screenshots, but you can take pictures of documents and just make sure all 4 corners are in there.
Mhm.
And it's legible and, and then you just upload it. And I mean, a lot of people can have PDFs too.
Yeah.
So you just upload it straight to the portal or you just email them directly. But I would say the quicker you have that in line, the quicker we can get going because realistically, there's not much I can do. I can't issue you a pre-approval
Mhm.
until you give me the documents.
Mhm.
I don't feel comfortable just sending out a pre-approval letter with
Unless you know,
information
yeah.
that was told to me. I
Mhm.
know some people may feel like that's okay, but it really is doing a disservice to every party involved. So I think making sure that you do so in a timely manner too. I mean, when you apply within 24 hours of receiving the link and in that same time you get your, you upload your documents. I mean, shoot, I get excited because it's like, oh, I can, get
Work
this
on
one
this, yeah.
and get it out. And then it's exciting because now I get to go back to you guys and be like, hey, we're pre-approved,
Yeah.
instead of, hey, where's that borrower at that I was,
It's like, who
sent you in
knows?
a group
Yeah.
text
Yeah.
2 weeks ago. We talked, I gave them the link and I haven't seen anything yet, followed up, but no text back, or something like that. And sometimes it ends up being, hey, like, and I get it. It's sometimes it's hard to get your documents from employees and stuff if you don't have your W-2s. Say you apply one day and then 2 weeks later you get the documents, but there's been probably like 10, 15 applications that came in before you, or like between in that time frame. And now it's like, hey, that sense of urgency now is like, we obviously we're going to input you in, but it might not be that hour that you submitted the documents. It might be a couple hours.
Yeah.
I try to do it within 24 hours of receiving the docs when it happens that way.
And you talked a little bit earlier about how someone will reach out and then they'll want to see a house and they basically want the pre-approval then and there because they found the house, but they haven't even started the process. Does that happen often? Where you feel like you have to be like on it? Because I feel like it happens to me all the time.
Yeah, it happened this weekend.
Yeah, me too. Me too. And mind you, I mean, some of these people that I'm working with, it's like they were shopping lenders. They got pre-approved with the one lender, but then they wanted a different one, which is who they wanted to work with. But this person was taking too long, and I'm like, well, we can submit with this pre-approval. If as long as this one gets approved, we can always switch if it gets accepted. But I think people don't realize, like, sometimes it is that quick. I almost think, like, wait till you have the pre-approval of whoever you want to work with, because, I mean, things can move really, really quickly once you find the one. And this one had a deadline of yesterday. They were going to review offers, but we didn't win. Sad day. But you want to know it's crazier than having one person get denied? Having two. I had to refer one of my clients and someone else had to write an offer because two of my clients wanted the same house. Yeah, I'm working with a lot of people right now. Yes, we both lost.
Well, at least you get to keep your clients.
And thankfully both of them like already told me like, okay, there's other houses we want to see.
Yeah.
But I just always get so sad. Now I'm double sad, guys. What the hell? Yeah, but it sucks. But I mean, hey, I always think if it's for them, it's for them. And if it's not, then it's not going to work out.
Yeah.
I feel like it always happens. They get bummed about the house, but then they get excited that they get the next one.
Yes.
And they're like,
yes.
I'm so happy.
Usually,
that
the first one didn't work out.
Yes. And usually I feel like I know when their house is coming because this will happen. Yeah. They'll submit an offer, it gets declined, and literally the next one is like theirs.
Yeah.
I don't know. Yeah. It's crazy. So
no, I'm such a big believer in this that like I pitch this to every buyer I work with up front. I say, hey, we might miss out on a couple houses. The market we're in, that's just normal. A lot of people do. I think back in COVID, I had clients that missed out on 14 houses before we finally got one.
14.
And every time it was like, it was getting worse and worse. It was like actually more heartbreak as we got further along because they're just like, maybe this isn't meant to be for us, And finally we got one. And they were like, actually, we're so happy that we didn't get any of those ones before because the house they got, I think it appraised like $35,000 over what they were paying for it, and we went over the list price. So it was like way underpriced.
That's crazy.
But I am huge on telling people like I feel like it's 95 to 99% of the time people are always like grateful that they missed out on whatever didn't work at the beginning because they wouldn't have gotten this,
Yeah.
So I do feel like though, we kind of circling back what you were starting with is I think it's completely reasonable to give a lender at least 24 hours to respond on an app. Because I think one of the massive perks by applying with you compared to like a bank is that you probably will pick up the phone on a Saturday or a Friday night or a Sunday morning and look at an application and be able to say, you know what, based on what you've provided, I can confidently say you're approved, and they can make an offer that morning or, that Saturday afternoon. Whereas if it's to a bank, you won't be getting called till Monday. Right. So that's like a huge, huge piece of value that I think is totally under talked about or whatever, not talked about enough.
Yeah.
And you probably work on weekends.
Yeah.
You know, like you said, a bank won't. I mean, I always appreciate, like, you know, if I ask for numbers, you'll send them right away. I don't ever feel comfortable with somebody writing an offer if they don't know what the numbers are. In a bank, you know, I mean, if somebody submitted their stuff on a Friday, they're reviewing documents on or, you know, offers on Sunday. We're not going to even stand a chance, because they're not going to get back to us till Monday with the pre-approval letter if everything's fine, you know, if everything's fine. I think that's the perks of working with someone like you, is you kind of work all the time.
Yeah.
Yeah.
And honestly, like,
Yeah.
there's nothing better because, like, I like to wake up early, and sometimes I get away from it on the weekends and just try to get some rest. But like, nothing feels better than when I wake up, you know, at my same normal time. I'm waking up at 5 o'clock and just going into my home office and cranking out stuff because I can get more done. There's
In
not
that
as
little bit
many
of
phone
time.
calls happening. I mean, I can get done in 3 hours. What, like, if I start at 9 at the office during a
Right.
weekday, that's not happening. You know?
Right. Exactly.
But just like this weekend, I coach high school basketball, and we have summer ball started, and so I took the boys over to Seattle Pacific for
Oh, nice.
like a 3-day tournament or a three games in a day, and it was fun. Had a great time, and an agent was reaching out to me like, "Hey, and needing the HELOC for the funds to purchase and stuff like that." And I'm like, okay. And you know, on my computer in Seattle, my hotspot isn't working the best. I'm like, oh gosh. So in between games, I'm going up to the coach's lounge and I'm like, knocking it out,
Trying to make it work. Yeah.
and then at least, you know, got credit and all that stuff pulled. And then I was just like calculating income on my phone. So, and luckily it was like pretty easy to calculate.
Yeah.
But I remember what he put on the application was less than what I calculated. So I just ran it through my phone real quick and I was able to send it to him, you know, and by the time that happened, we were already done with the games and we were outside of Wingstop, and I'm sitting in the with school district suburban.
That's so funny.
Yeah. So, but those are the type, you know, that, you know, you get excited about.
Yeah.
So there's one more thing I want to talk about. We're still on step 3 about applying and gathering docs, but there's one thing that I remember you telling me once before that it always sticks with me, because I think this says a lot about your character and the way you operate. When a buyer says that they want to apply, but they're not sure where they want to go to apply, you encourage people to apply at more than one place, even if it's not you that wins it, right?
Yeah.
Can you talk about that for a second? Because I feel like that's actually really cool.
Yeah.
It's selfless, actually.
Well, to me, I've always been, you know, having meetings with agents and stuff like that. Like, obviously that's the number one referral source, but I've always had the mentality, like, I don't care if you send stuff to other people. I really don't. Like, there's enough to go around, and I can be self-sufficient as well. You know, I can get leads. And so, I mean, the reason why I got into this industry was because I felt so good during the process. Like, Rodney Pignon, I just, like, thank you, Rodney, because like I would not been able to do this. And like one of my best friends, Drew Harris, who's in the industry too, after they helped me buy a home, you know, about a year later, he was like, hey, you know, Tony Andrews is, you know, hiring Q. You should apply. And I was like, don't you get a finance degree? You know, like,
yeah, like,
I don't know.
how do I get into that? Yeah.
Rodney made me feel so good in the process because, you know, I was one of those buyers that, you know, I just got done with my master's, wanted to buy a house. I knew I wanted to buy a house. I didn't care if it was, you know, I wanted manufactured on land. I remember that was my thing.
But you didn't get a manufactured home.
I didn't.
Yeah.
I didn't. And now I have my dream home. It took me first house, second house,
dream house.
dream house. Yeah.
Really? So that last house you sold, I thought that was the first house you bought. No?
No, my first house was in 2019, right next to the junior high, West Valley. And I wish to this day I kept it because it would be such a good rental. But I wouldn't change anything for the world. And because at that moment I was paying like $1,200 a month for like this, you know, little house off of the highway out in Natchez. And, you know, and my wife had moved into town. She was my wife at the time. You know, we were talking. She lived like in Westbrook Loop behind Dairy Queen. And we were both like paying, you know, she's paying like $800 for her duplex. And so I was like, you know, we could do this. You know, it went from $1,200 to paying like $1,750 a month for a $250,000 home. But what happened is 2 years later, I was able to sell that house for $90,000 more. Now, it was an outlier year because of COVID and everything.
Right.
But even if you spread that along five years, like there's no way. I walked out of it with like $60,000
Like there's no way you were going to make that off of like work, your 9 to 5
I would
or,
never.
yeah.
I made
And
60.
and I think that's like the piece that people don't understand is like, you don't buy the small house to live in it and then you live there for 30 years. No, you buy that so that you can either eventually like use that income to buy something bigger. You can sell it and there's equity that gets built and that's how people make all this ton of money. They don't just like
It's a
wake up,
starting point.
yeah, like it's a starting point. They don't just like make $100,000 in 2 days at their job. No, but in selling, you literally could make that in like 30 days.
Yeah.
And selling your home, and then you can buy something else, or whatever it is. But I think people don't realize like you're not buying it to live in it for 30 years. Yes, you'll have the mortgage. If you want to be there for 30 years, that's fine. I don't want to be at my house for 30 years. I want another one, and another one, and another one, but yeah, that's pretty cool.
Yeah.
I like that.
I try to tell it in my homebuyer classes and stuff. Like if you've been to my classes, you've heard that story before. But there's no way for me to ever save $60,000 in 2 years while I'm making 60, my wife's making 60. I spend money. I like to spend money.
Right.
You know,
And you
working.
have to. I mean, you have to spend money, right?
Mhm.
You're probably spending more than half of what you're earning, in in a regular like job. So it would be really hard to even save,
Right. Especially with kids.
something. Yeah.
Yeah. I've heard you say to clients before, hey, if you want to apply somewhere else, go ahead. Like all I ask is that you bring it back to me and let me see if I can beat it, because a lot of times you can. And I think that that's really great of you to offer, because you'll tell them, hey, you know what? That's a really good deal. If you want to go with them, that's okay. I want you to get the best deal in the end. This is you. This is you. This isn't about me. And so I've heard you say it to clients before. You've said it to me. I just think that that's huge. That's big, because it's selfless, but it really shows that you care about the client first.
Well, and that's really how it's,
Yeah.
in
It
my
should go.
It
Yeah.
should always
it
be
should
about
be
that.
that
Yeah.
way about the client. And I just met with someone the other day where it was like, hey, I know you're shopping and that's good. I won't hard pull your credit until you guys decide if you want to go with me or not. Obviously, you can hard pull credit and and still shop. But it was just kind of that thing to me of just saying like, hey, I won't hard pull it until, and the moment that they looked at each other and like, yeah, let's just do it right now. That felt good, so
Like reassuring, huh?
yeah, just like,
That's awesome.
there.
Yeah.
So
Perfect.
Okay. Awesome.
Moving on to number 4, Priscilla, what have you got?
Meet with your agent and go over a timeline. I don't know if that's what yours
Yeah.
says.
And
Yes.
setting goals. Yeah.
And set goals. Yeah. So can you explain to us?
So so after you apply and you get the documents and in whatever manner, time, right? Because everyone has a different timeline. But the moment that you get that, go to the agent that either referred you to me or I'm referring over to you or whatever. But go speak with them and tell them your goals. Like that's the number one thing, is being able to lead them like, I want this, and I want this. And how do I do that? Really just like pour into them and ask your agent questions, because if you don't ask it,
Yeah. And all questions are good questions too. I feel like sometimes people are afraid to say
Yeah.
something dumb,
There's
or
no
like,
dumb question.
or to, like you would want to know, like personally, me as an agent, like I want to know if you want 3 bed, or if you're settling for 3 bedrooms, or if you really need the 4th, if you really need the 3rd bathroom, or you can do away with 2, or do you want something smaller? Does it matter? Is it, I want to know all those things. I want to know if you want the backyard. I want to know if you want no yard, if you need a garage, if you work on cars and you need a shop. I need to know these things so I can get you what you want. But I think a lot of the times people are kind of shy to ask for what they really want, or they think it's not realistic. But I mean, you just never know. So
yeah, I think this is the time. This is after you've applied and at this point maybe have found out what you can afford if you've gotten the pre-approval back. I think this is a really good time for you to ask the questions with your realtor, and hopefully your realtor will be transparent enough to tell you if your goals are realistic. And I put on my notes here, making sure that it's matching the expectations of a lender too, because the lender might say, Jordan, they're approved for 400, but they have to go with an FHA loan. They need the down payment assistance. And that is going to probably rule out some fixer-upper houses and stuff like that. So that's why, I mean, it's not just about what you want and whether we can find it for you in that budget. We want to make sure that the lender is also kind of aware of like what parameters they have to work with around their loan. And so setting those expectations, like what you're saying, what do they need and what do they want? That's a great time to like write down and prioritize those things. If you've got 3 kids and you know that you need of 3 bedrooms and then a primary, right? That's a 4-bedroom house. You're not willing to compromise on that? Okay, that needs to be number 1. Then the things like maybe a pool or a shop, those can come later because those can technically be added. Adding a 4th bedroom to a house is not always an easy thing or a possible thing to do. But maybe you can find a house that has a space so you can, like on the outside anyways, so you can add a shop later and stuff like that. So that's a really good time to really be realistic about your goals, and then a timeline too.
Yeah. So how quickly, I mean, for me, I am not very pushy. I'm not very like
Same.
salesy either. So if it takes us 30 houses in 6 months or a year, I mean, it is what it is. I'm not going to be like, hey, do you want this one? Do you want this one? No, I'm going to ask you, what do you think? And I'll tell you, okay, let's move forward if you don't like it. I might even tell you, hey, don't buy this one, if it's really bad. So, I mean, I'm not very pushy, but obviously, like if I have somebody right now, they're expecting, they're due by this date. They want something before then. So when we were looking, I'm like, okay, like we have to hurry. We have to find something. So it was multiple houses a week. We found something. Thankfully, we're pending now. But, if you have a lease that's up in a month, I need to know that so we can find you something now, because it does still take 30 days to close. It doesn't take like a week or anything. So yeah, I think knowing timelines is important. And I kind of know too, like, do I give you some space if if you want to buy till the end of the year? Do I check back in with you at the end of the year? Because a lot of people come to me and they say, hey, I want to, we're just meeting for buying at the end of the year. We're going to apply, but we're going to buy till the end of the year. And then I have them pending 2 weeks later. So I'm like, I need to know, like, can you move sooner? Does it have to be till the end? Like what really is your timeline?
Right.
Yeah, because if you're like, I'm going to buy in 5 years, we probably don't need to meet right now.
Yeah.
Even like 2 years, we can meet and go over what the process looks like and the steps that you have to take to get there. But we probably shouldn't be looking at any houses because they're not going to be available anymore by then. Yeah.
So that's right.
Yeah.
Yeah. Okay. And last but not least, number 5.
Honestly, we see this all the time where, it's just trusting the process. You've already gotten through the first 4 steps and, assuming it's great, right? And just trust the process. Like trust the professionals that are doing this day in and day out. I understand that a lot of people have purchased homes, but everyone's situation is totally different. Whereas I see loan applications come in all the time and not one is the same. And it goes like for you guys too, where it's like, I'm sure no one's expectations are, they're what they want. But I would say just trust and be coachable because it's actually like an education process. If you really think about it, is can you take what we're saying and then use it? And it is okay to keep asking questions, but it's also the moment that you get over to an agent and they're conveying things and talking to you about it, like trust the process and really just trust them and that they have good intentions because energy is like something I think of often just because you can tell who has good energy, what their intentions are. Like how you're saying, oh, I'm not pushy.
Yeah.
If you're someone that does not do well with being pushed, like you're going to feel it and you can trust it or just communicate like, hey, I would rather not be pushed. And it's okay to set boundaries. I think like people are so scared to like say things directly to people.
Yeah.
And it's just like in general in life right now because of social media stuff, we got a lot of like Twitter fingers, and it's like, just say it, like just say it.
And at the end of the day, this is about you.
Yeah.
So, and we work for you, and if you're with an agent or with a lender that, especially I just think like agents, right? I hear this a lot, like, oh, I used to work with so-and-so. I said I wanted to offer this years ago and they said no because it wasn't going to get accepted. At the end of the day, sometimes I do write some ridiculous offers and they don't get accepted. But that's what my client wants me to do. And sometimes the client has to lose a house to learn not to do that, right? But I've also written really ridiculous offers that got accepted. And I continue to get these deals for people all the time because I'm not afraid to do what they're asking me to do. Given every house is different and every situation is different. And as realtors, we can kind of read the room. And if it's been one day on the market, guys, they're not going to give us $20K off. It's not going to happen, but we know that and we can explain that to you. But at the end of the day, if that's what you want to do, and I tell my clients like, hey, I know this is how low you want to go, or I know you want to do this. Just know that we're probably going to lose out on this. So I set that expectation. Like, if this is what you really want to do, I'll do it. But it might not work out.
Right.
So,
And I think there's some realtors that would tell them like, no, we're not going to write that. We're not going to waste our time.
right.
But I still feel like sometimes it's worth a shot. I
Yeah,
mean, it
because
really just
I've gone away
depends.
with some crazy shit, like $42,000 in repairs. Crazy shit. I mean, I
Yeah.
think you were the
That's a
lender
lot.
on that one.
I don't remember.
We'll talk about it.
Yeah.
It's a Moxie house, covenant loan.
Oh, yeah.
Yeah,
Oh, wow. Yes.
$42,000. That was
And
last
the
summer, I
covenant
think.
loan.
Yeah,
Wow.
and the covenant loan.
Yeah. And she's
Yeah, so
fixing
that
it
was
up right now,
crazy.
too.
Yeah, that was crazy. So you just never know. The world is ours, guys. Let's just ask what we want.
But within reason sometimes though too, because like,
Yeah.
I mean, as much as I
don't
don't
ask for
want,
$100,000 off. It's probably
right,
not
as
gonna
much as I
happen.
don't want to waste my time or your time, like writing an offer that I know isn't going to be accepted, I actually think there's another piece to that too. Like, you know, we have reputations with other realtors too, and to maintain being professionals in the industry, we have to set boundaries and limits on what is appropriate to be offering as well. You can't just throw anything out there. You do, and that's part of trusting the process. You do have to listen to the realtor and know that like we're not willing to write something that's just completely off the wall that might look bad on our part too, right? That makes it look like we're not the ones driving the car. As a realtor and being the one who's guiding you in your experience, we need to set some boundaries on how
I
we do
think
that.
too it matters though, like who your agent is, because I've written some really crazy ones and the realtors just kind of like laugh with me. Like we're kind of like, I know this is silly, but can you look at it?
Yeah.
And they'll be like, ha ha ha, Pricila, you're so silly. No, but I think as long as like we maintain like a good attitude and we're kind and we're like, we're approaching it not like, this is my offer. Like, I'm not going to be rude to somebody, but there are agents that do, respond to things or come across as very rude. And it's like, no, how are you? Yeah. Like, how are you going to do this and then still be rude to me and expect me to react kindly? So just be nice to each other, guys.
Yeah. Well, I'm like we see right now, seller credit is almost like on every single transaction, depending on the time, right? Like, I just had a client the other day. It was like, oh, we want to submit an offer. I was like, well, you need seller credit on this. This one's been on the market for, I think it was like 16 hours. And so I was like, you can submit it and ask it, and that's fine, but they might get an offer that's not, like I'm not the one doing it. But so just setting the expectation.
Right.
Like if I feel like if I don't set that expectation and they get their hearts broken, it's like, hey, you kind of knew going into this what the industry is kind of looking like. But a lot of times if it's we're getting seller credit, and what you can do with that seller credit is
crazy.
Is awesome. Yeah. Like there's a state program, the covenant program, and I love like thinking outside the box because there's so many ways that you can like maneuver that money or structure a deal for both agent and borrower. Like you guys, if someone's asking you for your, to take less in commission or whatever, like, well, it's a closing cost. That's like
You can factor that in. Yeah.
So I'm not going to give all my tidbits.
Okay, I do
on
have
that
a
one.
question though on covenant. Maybe I should come to you for covenant because you obviously know what you're doing. But I heard that the funds are running out for that. Is that a thing?
No.
Or they're changing things up?
They definitely change things up. And I do think it's for the better in terms of just structure for them, because what was happening was, they have a certain amount of money and then.
And where's this money
is, like,
coming from?
so like
ballers out
recording
here.
fees and stuff like that. So anything that gets recorded, right? Like my brother-in-law is a land surveyor and their recording fees went up. It's not just for buying homes. So they raise, from the state, he had told me that we raise anywhere from like 6 to 10 million a month.
Oh, wow.
Yeah.
Monthly.
So
okay, that's crazy.
what happened was it started gaining popularity. I mean, this was like June of 2024.
It's been a while. Yeah, it's been around for a while now.
I can't remember. But from then on, I was like, shoot, I'm halfway.
Yeah.
I'm like, I have like, I don't know how many cousins I have.
Yeah.
And so it's like, but I just started pushing it. And it's gaining popularity. And, the West Side eats up a lot of those funds because it's more expensive. The max that you can get is $150,000. But I mean, I had a client that we could structure everything to fit him. And he bought like a $650,000 home.
Wow.
First time home buyer.
That's crazy.
In Prosser.
Yeah.
In Benton County, they have higher income limits.
Yeah.
And we structured the loan to get him seller credit to buy down his interest rate. And he got the exact amount, $150,000.
Wow.
And he doesn't have that bad of payment
Yeah.
for that.
Yeah.
That's crazy.
That
That's
is
so
nuts.
cool.
So explain real quick the concept of a covenant loan. I know we've mentioned this on
Mhm.
here before, but who is it for and how does it work? And what are the big perks for it?
Yeah. So the covenant program, it's basically before the civil rights movement in 1968, right? It was
I like how you know
extremely
that. Like,
hard.
what does that even mean?
Well, it's like
Anyway, sorry, not
because
to
it was really
I'm
hard.
sorry.
Like real estate had a bad rap,
Mhm.
I mean, it was, hey, let's redline people and keep them in certain neighborhoods or away from, big money neighborhoods type deal. I know my family went through it. They were right off of Fair Avenue and everywhere around you, there's, the Harris's next door, the Jenkins, just everybody, and you knew the families, right? And a lot of the Black community worked at Boise Cascade. There weren't as many resources, right? And especially for like bigger areas, like the urban areas like Seattle and stuff, because it was like trying to people to the city, but then people wanted to live in the city. So we wanted to increase everything and push everybody out. You hear about it all the time where it's like, hey, people move in, like Hawaii, for instance, people come in, but and the locals there are getting priced
Pushed
out
out
because of
basically
taxes.
because it's too expensive. Yeah.
Yeah. And it's like, it's tough, but it's just how it's been. So now this is to help bridge the gap because really, as a minority, there's specific minorities that covers, and I know other minorities are trying to get into the program too, but for our area, primarily we're seeing, Black, Native, Hispanic are the most that I see, but there's also like Polynesian. I got to look up more on those. But really, it's a great program if you fit it. And what's crazy is you can go down the line. Like I have a cousin that is blonde hair, blue eyes, and he's a quarter Black, and he got it. It's just as long as you can show proof that your family, their history, they have had some sort of discrimination in it, then they're wanting to help because really that does change
Oh yeah.
your
The
amount of
trajectory too of your
amount of
life. Yeah.
family, generational wealth that
Oh
you
yeah.
have. So
But they do have to prove that they had a family member back that lived in the state of Washington in 1968,
yes,
right? Or prior to 1968.
prior to April of 1968. So it is pretty like labor intensive now.
Like more paperwork.
It is because you have to do everything up front. So I like any agent that is watching, don't shy away from a covenant loan when you see it now. There was a period of time where they did make the switch when they were getting low on funds.
Yeah.
They weren't out, but they're getting low.
Yeah.
But they had to structure something to make it so like, hey, we're only going to allow this many. There's a wait list. I mean, the wait list is all the way to October now.
Yeah.
If you get submitted. So
That's
we have to get the application. So if you want to come on, you have to act fast. You get the application, you get the family documents. While you're working on the family documents and getting that over to me, I'm looking at the application and your income. When you get the family documents to me and get me, there's a family letter and you have to take the class up front now and everything has to be submitted to the state for review. So you have to upload it. You have to get a TBD approved. So you have to take the application, send it into an underwriter. They look at everything and they conditionally approve it. So what you're getting as an agent and the consumer is you're getting eyes on the front end to make sure that this is like pretty solid. Like this is
like there's not going to be issues down the road. Yeah.
there shouldn't be, right? Unless you do something with your credit or job change or something like that. But as long as they say, hey, the family documents are there, you have the letter, you've done the class, and then you get put on the waiting list. And it's kind of nice because like I had so many, like I had like 10 people that could have been like June, July using the program. And now it's taking it to June, July, August, September, and it was like,
so
so
pretty much like say I have a borrower and I send them to you and they want to do covenant. We know that they qualify just based off of the documents, whatever. We send them to you, you get them approved TBD. Does that mean that they can't start looking until October or go pending till October? Because, right?
So you have to be upfront with everything. And really for lenders too is, with this whole switch, it's like, hey, make sure the covenant loan is on there. Like, so especially like agents, if you know that you're using a covenant loan too, just put it in like conventional other covenant or FHA covenant.
Right.
Because then it covers everyone's back, right?
Right.
But are you saying they need to go under contract and it won't be funded until October at this point? Like, because you have to have the house identified that they're wanting to purchase before you could submit it to the state, right? Or is that when they're approved?
No, so you can do TBD. So TBD is like no address. So
Okay.
the underwriters are going to look at it as if you had a house under contract already.
Okay.
But what's nice is they're sending updates. So it's like I have a client right now that is like 51, right?
Mhm.
And through 51 in line to 110 in line is going to be funding for like August.
Oh,
But
wow.
then for June, it's 0 or 1 to 50. And it's like, well, I have another person that's in the front line
Right.
and, they're like 20. And then I'm like, I know she's not buying a house right now. So there's high odds that that person, instead of funding in August, is going to be able to fund in July.
Mhm.
Well, I just had one that was the same situation, thinking it was going to be July. We ended up getting it in June, and it's just like a race to the finish line. And I feel bad for the title companies too, because it's like,
Because they got to hurry up.
because I mean, they're getting probably at least, I mean, probably in the same week, they probably get, I would assume like at least 10 or at least DPAs where, I mean, in the state now it's a slower process because they have like it in a queue. So it's like, it's not just like, hey, can you sit, you know,
Right.
I'll
That
push
kind
this
of
in front.
sucks. Dang
Yeah,
it.
because like even the relationship that you build with the state, it's
Right.
like, hey, we have to do it this way, you know. But I would say have that communication. I'll have that communication too with the borrower. Is just like, hey, your funds are for October. Now that means we could probably close within 7 days of the first week of October or something. So, and the state says don't get under contract until they have the
Like
authorization,
yes,
the stamp,
yes.
and so because they don't want it coming back on them, you know. So if we have, again, setting the expectations up front to people, that's the buyer's agent, the
Yeah.
listing agent, and the borrower.
Yeah.
It's like, hey, as long as everyone knows, like I have one that's under contract right now, and they're like, hey, we're cool. We're cool with the 60-day close. Like,
Okay.
you know, they're not
rushed.
they haven't,
Yeah.
they've been on the market for a while, and
Yeah.
they're like, hey, my clients love this home.
Yeah.
I just said, hey, client, be careful of being under contract for 60 days because something else might pop up that you really, really want. And so, but they're like, no, we want this. So we got it under contract.
Crazy.
Yeah.
Cool. Well, that's just my question. Sorry. Random.
Well,
but
and then there's some big wins with this one because if you make, correct me if I'm wrong, if you make under the median income of the area, if you stay in that home for more than 5 years, the money that they grant you, which is 20% down up front, can be waived.
Yeah. So there is a forgiveness option. The terms are a little bit kind of making sure it's just to protect the state, because you don't know if that program's going to be around in 5 years, you know. So there is some verbiage where it's like, hey, if the service like the servicing of the loan sells, so meaning the state no longer is taking your payments, they sold the loan to whoever. Now that forgiveness option might not be available if that person doesn't grant it. If the program's still around, I know the state wants to do that, but yeah, you have to keep it as your primary residence for 5 years. You have to, at loan consummation, you have to make less than the 80% area median income. So it doesn't limit you. It doesn't say, hey, you have to continue making less than $65,000. It's saying, hey, at the time you were making this, and then you can't have a late payment and can't be late on your first. So, but it is an excellent program because I had a client that she got nervous about it because she went from like $1,900 a month to $2,400 a month. And I was just like, well, you look at this. And I just broke it out. And I said, we looked at, what are you spending? Can you get away with not spending this? And cooking at home, maybe not going out and, you know, hanging out. Let's invite your friends over for like burgers and dogs or whatever. And I was like, if you can do this in 5 years, let's say it does get forgiven, and you want to, you know, it's been 5 years and one day, and you turn around and sell that house, once you have that forgiveness, all that equity is yours to then either go put the minimum down on a house. Maybe your life has changed. I know she had like in like 8th grade at the moment, and it's like, hey, that kid's out of it. Maybe they go to college, or maybe they go live by themselves, and you can do a smaller house now, or go somewhere else, or the market's changed. Well, you have that equity now that is yours. And that is the biggest thing. I mean, yeah, if you don't get the forgiveness option, like you're going to have to pay it back. But I'm like, okay, well, don't refinance your loan unless rates drop to like COVID levels. And then once that loan is paid off, then we'll just take the second refinance it into like a 10-year term or something like that. And then just keep making the same payment that you were and you'll pay it off quicker. You're almost doing a 40-year mortgage, in a sense, but it's saving so much in interest. I mean, it's changing payments. I've saw a payment that changed $800 a
That's
month.
crazy.
And they got the house that they wanted.
Wow.
It was the same. So for the, like, basically, like say it was like $350, they got to purchase a $450 home.
Wow.
It's the same monthly that it would have been if it was just a traditional down payment or paying with your own funds minimum.
That's crazy.
Wow.
Yeah.
So cool that you guys are out here changing lives. Like it.
That's right. Yeah.
Sorry, that was a long rant.
So quick recap then of the steps.
Yeah, let's do that real quick. Step 1, and remember, 5 steps for buyers to get started with buying a home. Step 1 is have an idea of a realistic budget and self-awareness of what you can afford and how you can maybe increase your budget by being a little bit more disciplined. Step 2 is connect with an industry professional. Doesn't matter who, they're all going to point you back to a lender that's capable of getting you pre-approved and asking all the right questions so you can be informed on how you need to perform as far as bringing documents and creating kind of a timeline. Step 3 is apply and gather your documents that you need for that application. I don't think we really talked about a whole lot about what kind of documents are needed, but I mean, real quick, I know it changes kind of based on your employment and stuff like that, but some simple ones would be like at least a couple years of tax returns.
Yeah, you're going to need 2 years to show a history that you're working and that you're a consistent worker.
What about pay stubs, a recent pay stub?
You'll need recent pay stubs. I always tell people, if you get overtime or a bonus, get me the very last pay stub of 24 and 25, or the last 2 years, and make sure that it has a pay date in December, because then we can average that income. We have to average any variable income. We have to average it.
Okay. And then do they need, their W-2 or 1099? Is there anything else that's like super important up front?
I mean, if you get any kind of state income, we can get it.
Other sources of income too. If they make money off of other rentals or investments that they have, they can supply that as well.
Yeah. And I would say a big thing that I see often is if you have rentals, put them on your taxes. Like, just put them on your taxes and go see a tax professional. Don't try to do it yourself. I mean, if you know how to do it, great, but put them on your taxes, because if they're not on your taxes, I cannot count that towards your income.
It has to be reported.
It has to be on your.
I see that. I see that all the time.
Yeah, for sure. So that was number 3, apply and gather your docs. Number 4 is connect with an agent to set your goals and your timeline. Make sure that kind of matches or is in alignment with the lender and what they can approve you for. And number 5 is trust the process and the professionals within it, the lenders, the realtors, or title and escrow, and be open to in-depth questions. We're going to have a lot of questions for you, and you may have a lot of questions for us, and don't be afraid to ask them. There is no dumb question, but together by, asking all the tough questions up front, we can really help dial in your timeline, your goals, your needs, and make sure that we don't have any stone unturned, right?
And get you into
That's
house.
about it. Yeah. So thank you again for being here, Taylor.
Yeah,
this was
so
pretty
much.
awesome.
Thanks for having me. It was fun.
Cool.
Yeah.
First
So if anybody, and not your last time,
Yeah,
we'll have you again. If anybody needs a loan, Taylor is one of the best for sure. And I'm not just saying that. Taylor knows his job very well. And that's why I send clients to you, because I think that you inform people well. You try to make sure that they have a well-rounded picture of like what options they have. I also feel like CMG offers a lot of programs, which is good. You guys are one of the biggest in town. So yeah, just call Taylor. If you need him, you know how to get a hold of us. And you guys know the drill. Like, comment, share, subscribe, all the other things.
Yeah. And Taylor has more info too. I think on your social media, I see you post like videos of different stories or like what they need to apply or whether you're working or not, stuff like that. So you guys can check him out. We'll link his social media below too.
Okay. All right. Well, thanks for watching, everybody. We'll see you next week.
Bye.
Bye.